Ladies and gentlemen, good day and welcome to Dishman Carbogen Amcis Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arpit Vyas. Thank you, and over to you, sir.
Thank you, moderator. Thank you all for participating on this Concall. It hasn't been too long since we met last, so there is nothing much to say apart from that things are moving in the right direction, as you can see from the numbers, and people during these challenging times have and are working very, very hard. The challenge of the manpower is decreasing, but still not at the rate that what we would have liked. I feel are still not normal, especially with the nation preparing for the third wave. In any case, one thing is for certain, that the faith this management has put in the existing people remains unchallenged, which is now seen to fructify. With that, I would like to hand over the call to Mark to give us a short update.
Thanks, Arpit. Good afternoon, everybody. I hope you're all well. I hope all your families are safe. So, a few high points, and then we can get into handing over to Hashube. The market remains very strong, very active. Inquiries continue to come in at a rate which is normal or above normal. As mobility opens up across the Western world, we're starting to get requests now for customer visits, audits, and we expect that to frankly explode across our global platforms in the next 3 to 6 months. As customers are able to travel, we're going to see more activity on the site, so that's going to happen. European operations continue to perform at a very high level. Gladly and very excitingly, Indian operations is coming back on its feet rapidly. The changes that have been made over there are enabling us to bring on production units in a very smooth manner and start to address the concerns that our customers have had, and we are starting again to continue in market supply of product. The late phase pipeline remains very strong, no change there except that it's continuing to be strong. Some of our specific technology plays are really starting to see some traction. So ADCs, microreactors, those sorts of things are really starting to gain some traction as well now. Also, gladly, our commitment to R&D that we made a year or so ago is really starting to fructify now. We talked before about calcifidiol trials and vitamin D analog trials. Those are now moving ahead for both the USA and Asia in a number of indications. And our first real new project in infection control for years has just been kicked off with a highly respected university in Europe, where we're looking at using one of our compounds to generate what we like to call a super disinfectant. The 2 lead R&D projects in Holland for the vitamin D technology platform are starting to really show some promise, and one of them actually goes into what we would call commercial piloting within the next 4 to 6 weeks, and we're very excited about that. The impact of COVID and Brexit specifically for Europe and our operations and sales out of the UK, they continue to be a challenge, frankly speaking. I think we understand the challenge now. We understand the time and effort needed to ensure that deliveries and shipments are done properly. It requires a lot more pre-planning, a lot more paperwork. Sadly, COVID and Brexit has only done one thing, and that's to guarantee that more trees will die. But we're able to manage the additional complexity and the time taken to do that now we understand the issues. Clearly, though, what we see as a reality is that the cost of shipment, moving product around the world, both internally within the organisation and externally to customers, continues to be a more expensive proposition than it was 18 months, 2 years ago pre-COVID. And that's something that we are managing with our customers, talking to them about the additional costs, and hopefully we're making progress in convincing customers that there's going to need to be more money to cover the transportation costs. So finally, I'd like to give you a quick update on the expansion at Riom, which is our French facility in Europe, where we are moving into commercial scale manufacture of parenteral sterile liquid drug. That project is on target, both from a capital and from a time schedule perspective, and the building is now completely constructed, and we're now commencing the fit out inside. So with that, I look forward to some interesting questions, and I'm going to hand over to our CFO, Mr. Harshil Dalal. So over to you, Harshil.
Thank you very much, Mark. Hello, everybody. A very good afternoon to everyone. As far as the financial results for the quarter are concerned, this was a stellar quarter for us on a consolidated basis, where we did a revenue of 550 crores, which is the highest ever that we have done in the first quarter of any financial year. This represents a growth of 16% as compared to the comparable quarter last year. The cost for the year, for the quarter, was at about 23%. The employee expenses showed an increase as compared to the comparable quarter last year, largely on account of increase in FTEs required for additional development projects coming out of Switzerland. The EBITDA for the quarter stood at 100 crores. This represents 18.3% as a percentage of the revenue, as compared to 9% that we had last year. The depreciation and amortization was more or less equal to what we had in the comparable quarter last year. Finance costs stood at 12.3 crores as compared to 11.5 crores in the comparable quarter. All of this translated into a profit before tax of 24 crores and a profit after tax of 16 crores. The major contributors to the revenue were, specifically speaking, three of them, as far as the growth in the revenue is concerned. One was CRAMS India, which did a revenue of 32 crores as compared to 14 crores in the comparable quarter last year. So we are progressively seeing an increase in the CRAMS revenue coming out of India, and which is a very good news. And this is directly related to the increase in the operations that we are seeing out of the Babla site. CRAMS UK did a revenue of 32 crores as compared to 25 crores in the comparable quarter. And CRAMS Switzerland, France, and China put together stood at 320 crores as compared to 309 crores in the comparable quarter. So overall, the CRAMS contribution to the revenue was 70%, while that of marketable molecules was 30%. And usually the CRAMS contribution is at around 75%. But the reason why the marketable molecules contribution is higher is because Carbogen Amcis BV had a fantastic quarter, where the revenues stood at 117 crores as compared to 72.8 crores in the comparable quarter, which represents an increase of 60%. So this was driven by the increase in sales of both cholesterol as well as vitamin D analogs that were manufactured out of Carbogen Amcis BV. On the margins front, Carbogen Amcis Switzerland, France, and China put together did an EBITDA margin of 19.3% as compared to 16.2% in the comparable quarter. So thus we saw an increase in the EBITDA margin as well. CRAMS UK did a margin of 19.6% as compared to 15.3%, while Carbogen Amcis BV stood at 29.5% as compared to 32% in the comparable quarter. This is largely on account of higher share of cholesterol as compared to vitamin D analogs in this particular quarter as compared to Q1 of FY21. So during the year, we do expect an increased revenue of vitamin D analogs in Netherlands as well. The capital expenditure for the quarter was approximately $12 million, which majorly includes the capex at our Swiss and French sites. So that's part of the overall capital expenditure that we are currently undertaking for the capacity expansion. The net debt, excluding lease liabilities, stood at $101 million, which is a similar level that we saw on June 30th, 2021, as well as on March 31, 2021. So overall, this was a good quarter for us, and we do expect that we should see similar kind of quarters in the current financial year, which would help us to increase our revenue substantially as compared to the last financial year, and this will also translate into higher margins. With that, I'd like to hand over the call to Mr. Sanjay Majmudar, our independent director.
Thanks, Arshil. Good afternoon, everyone. As you can see, things are looking much better now. More importantly, as Mark and Arshil explained, Bhavla site, I think almost 60% of it is now becoming operational. It has become operational in Q1, and I think in next couple of quarters, the operations at Bhavla should restore to almost the pre-EDQM levels in next 1 or 2 quarters, hopefully. And overall, I think this year would be much, much better than previous year, which I would say that overall, both from a growth standpoint as well as from a EBITDA and profitability, which are reported, it should be definitely much, much better. And I think while it is a bit early for us to be clear in terms of where we should, I think we should end the year definitely at the top line of which showing some growth over the previous year and significant growth in bottom line with a positive EBITDA and a positive profitability. I think with this, moderator, let's throw the house open for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, they may please press star and 1. Our first question is from the line of Karan Khurana from Monarch AIS. Please go ahead.
Hello.
Yeah, Karan, please go ahead with the question.
Yeah, hi. So thank you for the opportunity. 2 questions I had. I think I want to kind of get the management's color on the overall EBITDA margins going forward. And across the board, it seems like that CRAMS is apparently a higher margin business. So some color on that. And what is the management's plan to deleverage the balance sheet a little bit going forward, as it seems that we've highly leveraged as of right now? Thank you.
Yeah. So Karan, if I understood your question correctly, because you were not that audible. So one, you would like to understand on the EBITDA and also something on the balance sheet.
Yes, please. No, the debt on the balance sheet as well as the margin profile in our CRAMS business, right? Because apparently CRAMS essentially is a higher margin business, right? So wanted some color on that from the management.
Yeah, so on the CRAMS side, we have essentially 2 parts to that particular business. One is the contract research and development part, and the second is the contract manufacturing services that we offer to the customers. So on the development side, our EBITDA margins would be the highest when the product gets into validation, while the preclinical phase 1, phase 2, the margins would be lower as compared to validation. So in validation is where we make our highest margins. Once the molecule gets into the commercial phase, that's on the manufacturing side, we might see some kind of a discount being offered to the customer because the quantities increase significantly. But yeah, still the margins remain much higher as compared to the preclinical phase 1, phase 2. So that's how the overall margins are split on the CRAMS side. Since the margins on validation and manufacturing services are higher, and since we have large-scale manufacturing assets in India, the EBITDA margins in India, which India essentially does a bulk of the manufacturing, the margins are much higher as compared to our Swiss entity. So the right way to look at our margins would be to take a combination of all of the entities that are directly or indirectly engaged in the CRAMS business. So on the CRAMS side, our EBITDA margins would be roughly about, I would say, an average of 25 to 30%. While on the marketable molecule side, with the vitamin D business doing exceedingly well for us, and if you see the margins of Netherlands over the last 4 or 5 years, we have been doing an EBITDA margin of 30% plus. So overall, the CRAMS business, yes, it does a higher margin, but it's largely on the validation and commercial side, while even our vitamin D business that we have out of the Netherlands, that does an EBITDA margin of 30% plus.
So, overall, just to add, I think in a normalized situation, I'm not talking of this year, you can take a blended EBITDA margin of, say, from next year onwards, around 25 to 26%.
That's on a consolidated basis, everything put together.
Yeah.
Okay, that's on the consolidated basis. Okay. And my second question was on the debt on our balance sheet, right? So, what are our plans going forward when it comes to deleveraging it, or so that our bottom line could kind of essentially look a bit brighter?
So as far as the debt on the balance sheet is concerned, on a net debt basis, we are at about 100 million. And, the good thing for us is all of our debt is denominated in foreign currency. And that is the reason the interest cost on the debt is quite low. So, on one side we have long-term and short-term loans, which are essentially used for capex and working capital respectively. And on the other side, on the asset side, we have sizable amount of liquid investments as well as cash and cash equivalents. So, the thought is that rather than paying off the cheaper debt that we have on the balance sheet, we would rather make a positive return on the investments that we are holding on the asset side. But on a net debt basis, I think we are pretty much comfortable with a debt of anywhere between 100 to 120 million.
Okay, thanks. That's it from my side. Thank you.
Thank you.
Thank you.
Thank you. Our next question is on the line of Sai Kumar as an individual investor. Please go ahead.
Yeah, thank you for giving me this opportunity, and I congratulate on a good set of numbers. I hope Dishman Carbogen will do much better from here and turn positive. So my question is on the API. 16 APIs are in the phase 3 development. So when can we expect the commercialization of these molecules, roughly a time frame? And what is the revenue potential from these 16 molecules?
Okay, the first one is easier to answer than the second one. What we've been consistent about is the run rate of converting validation or late phase into commercial is about 1.5 per year per 18 months. And it normally takes a rolling program of a year or more to get something out of validation and into the commercial arena. So you start to see this pipeline will start to fructify within the next, well, it's already fructified. So the project we've talked about before with the joint venture with the co-investment with the Japanese customer. Well, we're still manufacturing that project, and we've started construction on the asset that will enable us to manufacture the commercial volumes. So that asset is going to be complete in the next year. and then we'll be into commercial volumes, which will be fairly significant based on what their forecast is. So beyond 20 million for that particular project at maturity. So, nice projects. So that's the cycle in terms of timing. In terms of value, it's so difficult to say because API volumes are different for every API, indications are different, scale is different. So we don't look at it as a blended number. We can't say that out of the 16 APIs, the average value is going to be $5,000 a kilo or $50,000 a kilo. We have projects that are spread across the platform from projects that are maybe $1,000 a kilo, right the way up to $60,000, $70,000, $100,000 a kilo. But $100,000 a kilo would be an ABC, for example. So the volume is quite low because the potency is quite high. So it is difficult to say. We can be more specific about individual projects.
Yeah, thank you. And one more question is on the vitamin D. So we just had a excellent growth on about 61%. So can we expect the same growth to be continuing in the coming quarters, or else is this a drastic growth or one-time growth?
No. I think we've been consistent about the vitamin D or the product business up in Holland, which is essentially where we run it from. And there are activities across the rest of the group, including significantly India as well. But that platform, if you like, of cholesterol and vitamin D, they're linked together. And it's a product business, so we're not making custom products for people like we are in the rest of India or our Swiss facilities, for example. So these are products that we sell to the market. What we've seen is that by diversifying the way we sell, but also diversifying our customer base, we've been able to drive greater value. And we've been consistent about saying that was our strategy all the way through. We're now starting to see the outcome of the efforts of all of the time we've been pushing that. And as Harshil quite rightly says, the lumpiness that we will experience in this business is based on what we sell. So vitamin D sales in 1 month might be higher than cholesterol sales. Cholesterol sales may be higher than vitamin D in another month. What you can expect over a year is that those sorts of margins can be maintained. But looking at it from a monthly or a quarterly basis is challenging. What we have are our own metrics internally, but it's difficult to say because it's a business where we're selling to customers and customer delivery, they want deliveries at certain times. It's not in our hands. The important bit about that business, and I'm giving you more information than you asked for, my apologies, but the important thing about that business is that we are now investing significantly in research and development of new indications, new ideas, new concepts, and new materials. And that's something that hasn't been done essentially since the acquisition of the business in 2007. So there's a real effort going on across Holland and India with joint project teams working to develop new products, which will extend the sustainability of this business way beyond where we need to be. So we're very excited about that as well.
Yeah, thank you. Thank you for giving me this opportunity, and all the best for your future endeavors. Thank you.
Thank you. Thank you very much.
Thank you. Any participants who wish to ask a question, they may please press star and 1 at this time. The next question is from the line of Satish Bhatt from Anvil Shares and Stock Broking. Please go ahead.
Hey, hi, sir. Congratulations on the good set of numbers. Mark, this question is regarding you in your opening comments. You told you started one project on the infection side with you're doing a collaborative work with some European university. Can you throw some light on that? And after I think what you got good initial data of your vitamin D regarding obese patients, or what are the plans regarding taking that product further, and what are the timelines or the milestones which you have to further achieve it to make it a commercial success?
Certainly. Thank you for your question. So the first one, about infection control, what we've been looking at, and this is something that Ark and I have been talking about for probably 18 months. Certainly, it came up as a big issue when COVID started to rear its very ugly head. We have a product which we've talked about in various discussions over the years. So It's not a secret. We have a product called Octenadine, which was developed by Mr. Diaz Sr., after his father a few years ago. And it's a tremendous product for bactericide. So there aren't too many bacteria that can withstand Octenadine. What we've been doing in India is we've been developing a process to encapsulate that product to extend its efficacy over time. So when you apply it on a surface, instead of the efficacy being a couple of hours, the encapsulation process, which our R&D team has developed, enables that effect to be longer. So we're excited about that as a product in itself. However, to really have a very effective product to surface, cleanse and protect human beings, we also need to have a virucidal impact. And Octenadine doesn't have that. So what we've been looking at internally is what other materials have a virucidal effect as well. And if we can find a material that has a virucidal effect, how do we link it to our Octenadine encapsulation to create a single product which is a super disinfectant, handling both viruses and bacteria? So we've now got some ideas. We've kind of tested those ideas with a world expert in a university in Central Europe. And we have just formalised a collaboration. So what will happen is this professor in his laboratory with his team will be looking at characterising what we have today and looking at screening various materials, and we have a very short target list. And then what will happen is that Dishman Carbogen Amcis will bring those materials back in-house and create the overall manufacturing IP. We're at the very early stages. We only started talking to the university after Christmas, but we have signed a letter of intent now, and we're going to, and we've given the go-ahead. So that project has just started. Answering your second question, so we talked about the work we did in the USA with obesity patients. We have now agreed a program in the US to look at a wider subset of obese patients. We've also just this week signed off a side project for calcifidiol, where we are looking at certain subsets of how that material is absorbed within certain bodily generated molecules. I don't want to say too much because we do have competitors in this field, so we do need to be cautious about what we say. But that's been signed off today as well. The other exciting news is that we reached a conclusion on Monday this week with an eminent professor who is going to start to look at now pulling together a clinical trial which we're going to perform in India, and we're looking at a certain subset of patients and a strategy there. And that follows on from our very small Iranian study that we carried out late last year. So progress, as we promised, is being made, and agreements are being signed and formal commitments have been made. So those projects are ongoing, and we will be able to give you limited updates, bearing in mind that we don't want to alert the competition too much as to what we're doing.
Sir, I think last time when the first set of calcifidiol data was out, I think you were expecting your data on COVID to be out, So are the data still out, or still the data assumption is still happening?
The data from Iran is out, and that has driven in a large part our strategy for going to a wider population of patients.
So are you going to make that data public?
It will be made public at some point in a peer-reviewed journal, not in a commercial journal, but in a peer-reviewed journal by the clinicians who ran that study. We have the data, so we've moved already.
Okay. Thank you, sir.
Thank you for your question. Very good.
Thanks.
Thank you. Appreciate it.
Thank you. A reminder to participants, if you wish to ask a question, please press star and 1. The next question is from the line of Naman Jain as an individual investor. Please go ahead.
Yeah, hi. Congratulations for a good set of numbers for the company. good improvement being seen on Q-on-Q basis. I have a couple of questions, before which just one clarification. In the opening remarks, Mr. Majumdar said that Bavla facility is about 60% up and running. So I'm presuming this is about 7 or 8 units out of the 13 that we have are already running?
That's right.
Okay. And on the questions front, one was that I believe after commercialization of molecules, so we already have 7 molecules which are approved in last 2-3 years, and a few more which will keep getting approved over next few years. So the margins, EBITDA margins are higher, upwards of 30-40% if I'm not wrong. So the blended EBITDA margins for the company in next 3, 4, 5 years, shouldn't they be above 30% or so?
Yes, Naman. So that's our internal target, to move first towards 30%, and then let's see how things go. But yeah, the target is to move towards 30% in the next 3 to 4 years time.
Right. And second question is in regards to this co-investment opportunity that we are currently having with the Japanese customer. I think in the last call we also spoke about similar opportunity with some UK-based customers. So how is it progressing?
That was a US, yeah. It was a US-based customer.
US-based, okay. Yeah.
Yeah, and they already co-invested with us 2 years ago, 2-3 years ago to get their clinical trial supply material, and we did that project. We now have a further co-investment which is now starting at our Hunschensville site in Switzerland, and that will enable us to manufacture their commercial volumes, so their projected commercial volumes. We were going to make a press release on that one, but the customer does not want to make a press release.
All right. Thanks so much.
But it's going forward.
Thank you.
Thank you.
Thank you.
Our next question is from the line of Dhruv Shah from Ambika FinCap. Please go ahead.
Yeah, hi, thanks. This is Nishit Shah here. Thanks for the opportunity and congratulations on a good set of numbers. My question is broadly on a strategy that if we are working on vitamin D analogs which can substantially add value and margins also, and now we are working on the antiviral products as well as on antidepressant products. Would it be correct to say that we will have a non-linear growth in the future?
That's a really good question. I think our goal, if we talk about the corporate goal, which is something that when Arpit came in and took over substantially running the business on a day-to-day basis, his goal was very clear that we need to diversify our business a bit more than we were diversified. We are looking at various opportunities to strengthen our product pipeline. We recognize that if you have a product of need and you are the innovator, then you have much more control over the value generation of that project. When you do just service work, free for service, a lot of what you do is under the control of the customer in terms of his growth, what he's doing with the project. So one of the strategies that Arpit has laid down for the leadership team of the business is to look at our product portfolio, leverage as much as we can out of the current product portfolio, but also put more time and effort into R&D to use the knowledge and the experience we have within our global scientific teams to generate new ideas, to generate new products. So what we will see, our goal is that we are going to have a larger proportion than today of products in our business. That doesn't mean that the growth in the CRAMS business will be stunted. We're pushing both ends of it because CRAMS is our heartland. That's our core. But the product side of the business has tremendous opportunities, we believe. And what we're doing now is evaluating and pushing some of those. So you'll see a larger proportion of margin generation long term from the product side of the business. And that diversifies the company, makes it more sustainable on the long term, because we don't know what's going to happen with the money markets. 2008 was a complete disaster for the pharmaceutical industry. with small to medium biotech being decimated with lack of venture money going in. We don't know if that's going to happen again. We can't predict it. What we can do is we can set our business in the right way to have enough diversity to withstand hits like that and continue to grow the business. So that's really the global strategy of the company. I think, is that fair to say, Arthur?
Absolutely, Mark. You said it spot on.
Yeah. So that's the vision for the business going forward.
Yeah, go ahead, Mark, please.
So that's the vision of the business going forward. So you see with our remarks regarding R&D, by the end of this year, Harshil will be able to give all of you a picture of the increase in spend that we are promoting within our product business. And that should be seen as being a highly positive thing. Because with a product business, if you don't invest in R&D, sooner or later your products become commoditized. And we were starting to see that happening. So we're not losing the good work that was done in the past on our product business. We're leveraging that, and we're putting more money in to take it even further. And I'm sure that at the close of this year, then we'll be able to give you a picture of a percentage spend of our accruals and what we're putting back into the business in terms of product R&D. But it is a clear strategy of the business. Absolutely clear strategy and goal.
So, Mark, related question on the same. You have a large ADC expansion going on in Switzerland. You have an injectable new project, greenfield project going on, where you just mentioned in your opening remark that the building has been constructed in France. So that will also add value. You have a CRAMS pipeline, which is a very large and with a lot of cutting-edge products. And now you are also having these product-related strategies. With what kind of company do you benchmark, or are you the one and only right now globally, or you benchmark?
No, we don't.
Or
we don't benchmark. Sorry, we don't benchmark against other companies. In the CRAMS side of the business, in the fee-for-service business, there are a number of competitors, and I've been consistent about this. We have some good competition out there, but there aren't many companies like Dishman Carbogen Amcis who have the geographical spread and technical capability that we have. There are companies out there that do, but not many. In the product side of the business, in the vitamin D side of the business, we have two competitors. Okay? And those two competitors, one is European-based and they're very big, but they're also diversified. And we have a Chinese company that is heavily invested in the vitamin D side of the business and some other things. So our competition strategy is very much dependent on our understanding of the market for each of the products or services that we are providing to the market. So it may sound like it's a lot of activity, but it's not. We've been growing the CRAMS business for years, and we will never stop. I do want to correct one thing, though. We're not building a large-scale ADC facility. We're building more reactor capacity in Europe to address the pipeline we have. The ADC business, we are waiting. We built a facility, I think, 5 years ago, Harshil?
Yeah, about 5 to 6 years back.
Yeah. We built a facility that enabled us to go to clinical phase 2 or very small phase 3 and commercial very small. That facility is filling up, and we have one particular project for a German customer, which is very, very promising indeed. And validation is drawing to a close now on that one. We have a follow-up molecule from that customer, and we have another couple of projects that are waiting in the pipeline. So ADCs and doing the actual drug conjugate bit, which is linking the biologic to the synthetic chemical, is something that we have invested in, and we are now looking at how successful and how positive that is before we make the next step of investment. Okay? So that's the only thing I wanted to correct you with. With the formulation business, we see real opportunity in doing the API and also being able to do the formulation. But again, it's focused on niche, difficult to do things. We're not going to go and compete with Patheon. Patheon have been in the business of formulation for 40 years, and they have massive capacity everywhere. That's not where we're going to compete. We're competing in an area in the market where there is an unmet need. A company that's flexible, can handle really tricky products, and can do it flexibly, fast and quick, and at a high level of quality. And that's where we know we can compete and we can make money.
Great. That's very useful, Mark. But my last question is, we have more than 25 products which have gone commercial. Are we seeing the follow-on commercial API manufacturing orders from those innovators companies?
Yeah, I think generally we are. There's been one or two that have dropped off the radar, and we anticipate that in our forward planning anyway. So, if we say we've got a pipeline of late phase 3 and validation projects that are somewhere between 15 and 18, I do not expect all 15 and 18 to fructify in the next 5 years. I'm a realist. I know what happens in this industry. Things die, business changes. Our customers have their own competitors. So, if a competitor of AstraZeneca brings out their product 6 months earlier, then the sales of AstraZeneca for that particular molecule, if it's a competing molecule, is going to be critically damaged. So, we always put a bit of a tolerance on it. So that's why we say, and we've been consistently saying, it's 1.5 or so every, sort of 1.5 to 2 years. If it's better than that, we're happy. If it's on that line, we're also happy because that's what we predicted. And there's a tolerance of failure in there because we know what the industry failure rates are. But we're familiar with it, I should say. I shouldn't say we know. I think we're familiar. So not all of them are going to be products. And regardless of what customers' forecasts are, a forecast of a product that hasn't been launched in the market yet is just a number. Until you really are in the market, you just don't know, because uptake is different in different countries. The co-investment with the Japanese customer, at the moment, we're in discussions with them, and they're talking about different numbers, and they're different numbers positively. But again, the message is they just don't know. But the message they're getting back from clinicians and getting back from the market is that this product is going to be a real product of need, and they're looking at different indications of cancer now as well. So who knows? And that's the thing with a service business. You are in the hands of the customer from a marketing perspective. Once you're making the product, the customer's marketing his own product. And that's why RPIT wants us to put more emphasis back on product as well, so that risk, which will always exist, is mitigated somewhat by this organisation using its skill and knowledge and experience in science to generate some of our own products. And we have more control over that and more predictability over it. So, I suppose in one way, what I would say is we're listening to the investors. We're listening to the market, where the market is asking us to put a plan together to make this business grow and be sustainable in the long term. And that's what the leadership of this business is doing.
Thanks, Mark, and all the best.
Thank you.
Thanks very much.
Thank you.
Thank you. Any participants who wish to ask a question may please press star and 1. We have the next question from the line of Rajesh as an individual investor. Please go ahead.
Hi, maybe a couple of questions from my side. One would be on your Bavla site. So when we would be seeing 100% operation in that particular site? And the second question would be on the European business. I think recently Europe had proposed carbon border tax. Given that most of your facilities are in Europe, so would you benefit from such kind of measure in the future?
So Rajesh, as far as the Bhavla site is concerned, what we expect is that we should be back to 70% of the CRAMS revenue that we were generating from Bhavla during the course of the current financial year. And some of the units would be started progressively in the current financial year. Part of them would be started in the next financial year. So I think sometime during Q1 or Q2 of next year, we should start seeing Bhavla back to the CRAMS revenue that it was generating in a normalized year.
So, okay. Yeah, sir.
I think on the other question you had, we're watching to see what's happening because although we are in Europe, from a geographical perspective, from a political perspective, we are a bit more diversified than that. So the main part of the CRAMS service business at early phase and niche phase is in Switzerland, which isn't part of the EU. And of course, then we have our facilities in France and Holland. So we're watching what's happening with that. But more importantly, what we're doing is we're looking at ways of being able to reduce the volumes of volatile organics by developing processes that don't need those volumes. We're also looking at techniques to be able to be more sustainable with our waste management. So and these are things that are ongoing projects, with thermal oxidization and things like that, and being able to get rid of our waste ourselves, but also to be able to generate heat and power from that waste. So again, creating virtuous circles with these things rather than, taxes which are essentially designed to encourage people to do cross-border stuff, frankly. But we are watching it, and we will never say never. But once policies are in place or are proposed to the Senate of the European Union, then we will develop our own strategies of how we manage that and how we address it.
Okay. Maybe a follow-up on Bhavla site. So why it is taking so much time? Like I believe that most of the approvals have already come, and why we are not able to scale it up to 100% as soon as possible? So Rajesh, we have been receiving clearances from the customers on the CRAMS side, and we have received purchase orders that need to be serviced during the course of the current financial year, so essentially in Q3 and Q4. But the real ramp up, for the full year revenue to get realized, it would be only in the next financial year. There are certain customers, where we are yet to receive the clearance, or we are still in the process of negotiating the commercial terms for the quantities that they require. Because what we have also done is that we have gone back to certain customers, revised the pricing of the products that they want to source from us, because there will be an increased cost where we would be kind of dedicating certain units or certain equipments to that particular customer, and hence we have gone back to the customers with the revised costing and the revised selling price. So that process is going on right now as we speak. And the EDQM audit per se would be sometime in I would say in Q1 of next financial year or in Q4 of the current financial year. Once we have all the upgradations that we wish to implement, that is already done to our satisfaction, then we can write to the EDQM to do a remote inspection or a physical inspection. Also, all of the units in Bhavla, they are starting progressively. So, last year at this time, we had stopped operations completely. But then one after the other, as we received clearances from these customers on the CRAMS side, we have been starting one after the other manufacturing unit out of that particular site. So right now, as we speak, we have about six units which are up and running, and we would start another 2 to 3 units in the next 3 months or so. So it is a progressive thing, and in order to cater to these purchase orders that we have received, the cycle time to manufacture is a minimum of 3 to 4 months, if not more.
So that is the reason, we are saying conservatively during the course of the next financial year, maybe in the first or the second quarter, we should see the Bavla revenue equivalent to what we were doing in a normal year.
I think also, could I just add that we shouldn't underestimate that a year ago we had restructured the business, we had reduced our costs by reducing the number of staff. We were looking at changing the mix of our staff, smaller number, but bringing in new people, and then COVID hit us, and especially in India, it was an absolute nightmare trying to hire people because people couldn't travel, they couldn't come to the site to talk at interviews and things like that. And that hit, and that really hurt our timeline because this work can't be done by non-people. So that was something we couldn't anticipate, and that had hurt us. Now, obviously, the situation is different now, and the rate of hiring has increased substantially as a result. But that has hurt our timeline. I think that's fair to say, Harshil.
So should we assume that from here on, incrementally, we would see more improved performance quarter after quarter from Dishman, right?
Yeah, that's certainly the intention. That's the goal. Absolutely. Yeah.
Okay. And maybe one more question from a strategic perspective, if I can ask. Given that a significant part of your operations are concentrated in the European market, and the way we are seeing the China plus one policy, people are investing more and more in Indian operations. So how do we see this strategic? So should we say that we are on the negative side, so we are basically a bit more disadvantageous of having more expensive facilities in the European market than the people who are building operations in the Indian market?
No. 50% of what comes out of Switzerland goes directly to North American customers. So although it's located in Switzerland, it's doing business across the world. So, from a strategic reach, we're not concerned that we have any deficiencies from a strategic reach. And traditionally, Carbogen Amcis, as an entity, has always had a very high level of revenue and business flow from North America. That level has still remained, and what we've been able to do over the few years is to grow our European and Japanese business. So yeah, we're not concerned about that at all, and I think we're strategically placed in India and, of course, in China. And the Chinese business, the facilities over in China are picking up very nicely. And China is starting to develop its own manufacturing culture, if you like, for innovation culture. So we're actually working right now with on pulling together a scope of a project with a Chinese innovator. And they're looking to develop and introduce a brand new drug, not a Me Too. And that's where Carbogen Amcis can play very nicely because we have a non-compete with our customers' promise. We don't have any issues about security of IP. And Dishman Carbogen Amcis has had a very strong track record in that since the foundation of the business. And customers know that. Customers know our position on IP. Other companies may be a little more flexible with customers' IP. We're very inflexible with customers' IP. It's all theirs. And those sorts of things, I frankly don't see us as being at a disadvantage. If we were at a disadvantage anywhere, it might be that a North American facility at some point might be an advantage. But at the moment, we don't see the cost outweighing the advantage of the cost benefiting it at the moment, unless a piece of technology came up. So no, we don't see that as a disadvantage at all. We really don't. I think the global spread and the integrated nature of our business can only benefit customers. They have lots of opportunity to pick and choose. And we have lots of opportunities. So, yeah.
Thank you. Best of luck for the...
I will add that actually it's an advantage rather than it being a disadvantage because very few companies have similar situational plants very strategically located. In fact, all the relatively very high value and low volume products are even commercially manufactured in Switzerland and then when the volumes go, there is a seamless technology transfer where, they can be migrated to India. So I think it's a wonderful combination, and we have the best of both the worlds, or rather all the worlds, if I may say so, in terms of opportunity.
Thank you. Thank you very much, sir. Best of luck for the rest of the year and time ahead.
Thanks for your questions.
Yeah. Thank you.
Thank you. Our next question is from the line of Praveen Jadhav. As an investor, please go ahead.
Thank you for taking my question. I just wanted to know one answer. Like, when will be the JV with the Japanese revenues start?
It's not a JV, it's a co-investment. So what they're doing, we're building a facility to enable them to reach their commercial volumes, and they are co-investing in that facility with us. So it's not a joint venture. We don't have a business relationship beyond them investing in the facility and we producing material. We already have generated, I think, Harshil, you may have to correct me here, but I think in this year, I think there's been $15 million, $20 million of revenue.
Yeah, roughly about that much. You're right.
Yeah, and that's the validation costs. And bear in mind that this particular product, we manufacture pieces of it in China, we manufacture pieces of it in the UK, and we manufacture pieces of it in Switzerland as well. So it's a really, really nice project for us because it utilizes assets across the platform. So commercial volumes or commercial revenues will start to accrue towards the end of this fiscal year, but really kick in next year when the facility is completed.
Okay, sir. Thank you very much.
Thank you for your question.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Arpit Vyas for closing comments. Thank you, and over to you, sir.
Thank you, moderator, and thank you all for your wonderful and insightful questions. All your questions always help us to look at things in a different way and give us an insight of the kind of expectations that you would have in terms of the answers that we would be preparing and the information that we would be sharing. So please keep that up. It is truly great and honor for us to be answering all of those questions, and we hope that we are doing so at your full satisfaction. Thank you all.
Thank you.
Thank you very much.
Thank you very much.
Thank you. Thank you.
Thank you, moderator.
Thank you, sir. Ladies and gentlemen, on behalf of Dishman Carbogen Amcis Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.